This video is sponsored by Morning Brew. Click the link in the description to check out their free business newsletter. Ladies and gentlemen, welcome to The Plain Bagel. I'm your host, Richard Coffin. It's everyone's favorite time of year. Time once again for Investment Analyst Reviews, Investing TikToks, Part 4. We're at the end of the year, and needless to say, it's not been a good time for markets. And sadly, I think it's had its impact on FinTalk. Gone seem to be the days where a high school student would tell us which stock was going to Forex next week, and teenagers would flex their wealth on us for all the gains that they made from their all-in cryptocurrency gambles. And I know it's an emotional time for some to see that closing of that chapter, but I want to lift up everyone's spirits and remind us of the good times we had together during that crazy period where it seemed like you could just throw a dart at the board and make money, and show us some of the old TikToks that I've saved that I didn't have time to go through in the past, as well as some of the new ones, because the space is not dead, needless to say. There are still trading programs and people telling us which stock is going to Forex next week. It's just not as prevalent as it was before. Now, I will highlight, as I've done in the past, that not all finance TikToks are like this. There are those who put out good content, good information that help people learn about investing. My goal is to go over ones that aren't like that don't generally fall into that category, where I can add value. As someone who works in the industry as a registered portfolio manager, I have my CFA and my CFP designations. My goal is to just clarify some information because stuff very easily gets misconstrued. So sit back, relax, and let's go over some of the good times that we had together on Finance TikTok.
What do you do when the government tries to tax your Bitcoin?
And at the end of the day, you can tell everybody to go himself. You can put it in your head, memorize the freaking key, right? And it's here. And then, the classic Bitcoiner response is, oh, yeah, my Bitcoin, I lost it in a boating accident. What it means is, at the end of the day, if you push me too far, I lost it. It's gone.
So the good news is that if you bought Bitcoin when Michael Saylor here told you to buy Bitcoin, you don't have a tax liability because you only earn taxes when something goes up in price. In fact, you might actually have a benefit. It might be worth realizing the loss on your Bitcoin because that would reduce your tax that you need to pay that year. But I do want to be clear that losing your money doesn't negate your tax liability. You could say that you lost all your cash. You had it all in a safe and you lost it during a boating accident. That doesn't really change the tax authorities' opinion about how much you owe them, and you'll probably still end up in jail. So keep that in mind. I sure hope this person put #not tax advice in their video description because that could be a felony. Don't recommend that approach.
Here's how to become rich in 5 years max, no matter how old you are. Step 1, you have to save up $100,000. This is the hardest part. Once you have that $100,000 saved up, you never have to work again, and here's why. First thing you're going to want to do is put that $100,000 into TD Ameritrade. Next thing you're going to want to do is you're going to want to find a reputable, safe stock, right? For this example, we're going to use NVIDIA. You can take this.
I don't know if I'd call NVIDIA safe stock. Reputable, sure, as a company, but safe, you can kind of look at the stock chart to get a preview of that.
Then you want to take those 1,000 shares that you just bought, go over to options, right? You're going to sell options. You're going to pick a date 1 week out, and you're going to pick a price that you do not think NVIDIA will be over, and $1,480 is going to be deposited into our account instantly. This is just one method I'm using to become rich in the next 5 years. If you guys want to know more, like, follow, and comment down below.
It's that easy, folks. Okay, so this is something called a covered call, where you buy a stock and you sell a call option. A call option is the right to buy a stock. So if you're selling a call option, what you're doing is you're telling an investor somewhere, if the price of the stock goes up, I will sell you this stock at a specified strike price. But by selling call options, by doing that and exposing yourself to that risk, you earn a premium because call options have a price tag to have that right, but it also caps your upside because if the stock reaches past a certain point, you're stuck selling the stock at that strike price that you agreed to sell it at. And it is a way that some traders earn a bit of extra income for their portfolio by selling call options for positions they have. But there's a very good reason why you should not rely on this strategy for income, especially in this manner where it's your only $100,000. And why there's still a good amount of risk with this approach, even if it might not seem that way. In theory, this would be reliable if the stock never really moved in price, because you would be able to keep selling call options. The calls would never be exercised, so you get to keep the shares, and next week you could do the same thing over again. And I think according to this example, that means you would be earning 60% annually. So, not bad performance. But if the price increases, obviously you miss out on that upside because you've capped your upside with a covered call. And if the price of the stock decreases, and this is important, next week when you go to redo this strategy, let's say now you only have half of that same principal, you will not earn as much money from the next set of calls that you sell. And if that price keeps falling, you will make less and less money by selling those call options. And maybe 1 week, it won't be enough to cover the bills. So it's by no means a reliable source of income, not to mention that the premium that you would earn, that income that you generate, is going to be less for more stable stocks. So the more likely that you are to make money from this approach, the less money you will make from it, right? Because again, there's a risk reward trade-off. And certainly putting all your money into one position, especially Nvidia, which again, pretty volatile, that introduces you to so much idiosyncratic risk. So options trading, covered calls, very valid techniques, but you need to be so careful using them. I very much don't recommend taking options trading advice from TikTok because they will never cover the risks that you need to be aware of dealing with this stuff. This is really how a lot of people go bust in the world of trading, is using these types of tools. So keep that in mind.
About to buy $1 million home for half the price. The thing is, you can only do this if you know how to utilize cryptocurrency. So this is the house that I'm gonna buy, and it costs about 1.4 million. So I'll have to pay around 7 grand a month. But for this entire house, the total that I need to pay is 740K. And it's because of crypto. For the down payment, I'll have to pay about 20%, which is 290K. With the remaining 450K, I'm gonna put that into the Anchor protocol. Once I deposit the 450K, it'll yield me 19% per year. That's 88 grand a year. Now divide that by 12 months, and that's gonna make me 7.3K a month. Just enough to cover the monthly cost of this mansion. After it's paid off, I'll have a $1.4 million home, plus be making 7.3K a month doing nothing. If you wanna learn more about crypto, check out my bio.
So basically this guy is saying that because he can earn a 20% stable yield on this cryptocurrency protocol, that it will help pay for this house because that's a very high return. For reference, it's roughly double of the long-term average return of the S&P 500. But there's a very easy explanation as to why that 20% is not going to last very long. In a world where traditional savings accounts are paying 3 to 5%, obviously 20% stands out as a very high rate to earn just by putting money into an account. If you want high return, you have to take on high risk. And even though this platform might present this thing as being a deposit yield, it's certainly taken on risks somewhere. So imagine taking out a mortgage by the skin of your teeth with not even enough money to cover maintenance or your tax obligation, only for this to happen. So very high risk, would not recommend. Anything that offers an unreasonable return as a yield, very likely introducing risk in some form that's not being advertised to you. And in the world of cryptocurrencies, there's no guarantees, there's no protections for consumers or investors. So be aware of that when someone's telling you you can earn 20% by putting money on a platform. It's not sustainable.
You want $100,000 coming into your bank account every single month. This is what you're going to do. Real estate, you can make money out of thin air. It's legit. You can actually make money out of thin air.
I've seen it.
All you need to...
I've seen it. I think that might actually be the guy that we did the portfolio check on in the last video. I highly recommend that segment.
Need to do is be able to save up enough money to buy a real estate property. Okay, now inflation is going to come in and it's going to fuck up the dollar. Now the property is going to appreciate in value. Now all you have to do is pull money out of that equity or real estate property value that you just made off of thin air. You're going to pull that out and go buy another one, do the exact same thing, and you're going to keep doing that, keep doing that until you have 1 million fucking properties. Every single one starts cash flowing $3,000 to $5,000 a month. There you go, you got 100,000 coming in your bank account.
I think it might be good that we're having a market crash. I think it's healthy.
3 cryptos that will go to the moon in 2022.
I don't think I've actually done this for a cryptocurrency one yet. Jeez. Wow. That's unfortunate. That the moon's a lot lower than I thought it was. I think this might take it. I think this might be the worst set of investments I've seen on this platform so far. Well done. Now, I want to be clear. I will never criticize someone who, did the research, tried to highlight their justifications for a stock or even cryptocurrency, which I don't necessarily believe in. I think there's a lot of fluff in that space, but I'll never criticize someone who did that work and then the thing didn't pan out properly, because, you know, in the world of investing, you can have good decisions and bad outcomes. It doesn't necessarily mean that you did a bad job. But the more frivolous stuff, a TikTok portfolio of positions that will take you to the moon in 2022, it's that kind of overconfidence that I think is pretty indefensible. That's why I'm willing to be a bit more harsh on this kind of stuff, because who's going to consume this kind of stuff? Usually younger, more uneducated people in the world of investing. And there's really no need for it outside of just generating clicks. So I don't like it. Don't do that. We don't do that. I hate this content. I hate it. I hate it so much. I hate everything about that stuff. It's all the same format. It's all what people who are selling a course do, which is show your wealth somehow, you know, do a small flex, pretend it's not a big deal, show that you're trading for like 5 minutes, and then link to the crappy course that you're selling for a few grand, which is how you actually are making your money. Generally, I would say you should never buy into a signals course, a trading course, whatever have you, because there's no promise of quality. Like, this is a young guy who probably doesn't have proper education in this space telling you what to do with your money. But with the course or signal group approach, they're transferring the risk onto you as the buyer, right? They get their money from selling the course, and you should ask yourself, why are they offloading that risk onto you rather than just taking on that risk and doing such a profitable trading strategy? It's because it doesn't work, right? The ones that do work aren't being advertised on TikTok in this very cringeworthy way. So I have no love for this stuff. I absolutely hate it.
People always tell you to invest your money, but never tell you how to invest your money. So for a while, I would just buy stocks of companies I thought would do well. Rivian, for example. Amazon bought a bunch of Rivian trucks. So I was like, you know what? They've got some potential. Put a couple $100 in, and needless to say, it's no longer a couple $100. Weed got legalized in a lot of areas, so I bought some Sundial stock. Did not end up well. And then, of course, my crypto is down like 300%. But my worst investments were also my best investments because they taught me. I know nothing about investing. So now I have a woman named Ellen who invests my money into things like index funds and IRAs.
That was refreshing. Thank you, Carter PCS, for being honest when a lot of people generally aren't willing to be honest with how they did and stuff like that. I don't like saying that people can't invest in individual stocks themselves. But I do think you shouldn't half-ass it. And I think the last few years probably really encouraged that kind of casual investor, that casual trader that, you know, just bought stocks that they heard in the news because everything was going up. Hopefully that's been a bit diminished over with the recent stock performance. But, you know, if you don't want to buy individual stocks, or at least you don't want to do that work yourself, there are plenty of other options available. You can always do a broad-based passive investing strategy. You can use a robo-advisor, which is kind of a middle ground between an advisor and a passive, you know, managing your own ETFs, or reach out to an advisor who can give you that guidance if you want it. There's a lot of options out there that are more sensible and more reliable over the long term. So thank you. That was a good one to end on, and I think that'll be the last one for today. Thank you for joining the 4th installment of our TikTok series, possibly the last one. It all depends on where the market goes, I guess. Maybe we'll see a renaissance in the space. Before I sign off, I want to give a quick thank you to our sponsor, Morning Brew, a tech and business newsletter that sends out content 7 days a week. And they're an awesome resource if you're looking to diversify away from FinTalk stuff. They do a good job of providing a broad overview of everything that's happening. For example, on Monday, they covered the protests in China, the bankruptcy filing of BlockFi, which is the latest domino to fall in that space, as well as the fight that's happening between Elon Musk and Apple over advertising on Twitter. So you can see that they cover a lot of ground. And one of the best parts of the newsletter is that it's all done with witty writing that actually makes for an enjoyable read, which is very different from other types of reading you might do in the space. And unlike the trading courses and signal groups on TikTok, the people behind it are educated and the service is free. It's completely free to sign up for the newsletter and get this content right to your inbox. You can use the link in the description below to sign up. It takes just a few minutes, if not a few seconds, and it does support the channel. So thank you, Morning Brew, for sponsoring this video. And thank you guys for joining me once again. I really do appreciate it, and we'll see you in the next one. Until then, as always, be safe out there.